Hi everyone, welcome back to Paisa, Bolta. As you notice, Anand is traveling, so it's me and Kesav again in the studio. Kesav brought up an interesting article which we were trying to figure out and understand how it's going to affect all of us as investors, which is the impending merger of HDFC Bank and HDFC Housing.
Yeah, sir. Sir, my first question is why is the reverse merging happening, sir? That is, why is HDFC is going to merge with HDFC Bank, sir? What is the purpose of this reverse merging, sir?
It's all about money, man. More than that, what do you need to know?
Sir, no, sir.
Sometimes it's profitable for a company to split.
Okay.
Okay, give shareholders value in two companies. Correct?
Yeah, sir.
Sometimes by combining it,
Can make more money.
yeah, as an investor also you make more money because the assets from one and assets from another combine, the liabilities from one. I'm explaining this simply to you instead of getting exactly what HDFC Bank is, what HDFC Housing is, and confusing you. So it's an advantage. So it's like you and me joining a team.
Okay, sir.
Okay, if I'm a fast bowler and you're a batsman, if we work together, then we make a good team. Because when it's batting time, you will bat well.
Yeah, sir.
When it's bowling, I'll bowl
You'll
well.
bowl.
Yeah. But if both of us are all-rounders, then it makes sense for us to look for other teams.
Yeah, sir. Understood, sir.
No, weird way I'm trying to explain it to you. So in the case of HDFC Bank, there used to be two separate entities. Now one has strengths, the other one has certain strengths. By putting it together, it fits, unlocking value for investors.
Okay, sir. Sir, but the analyst said that they have to reduce the index capital. After
Weightage
saying
you're
this,
talking about.
Weightage, sir. Sir, and analysts are saying that they have to reduce the weightage of the index capital.
See, there's a problem. There's a rule in active fund managers, not passive, active guys. The rule is more than any one scheme they have. Let's say you say a case of mutual fund, and you're an active investor. You are in charge of your portfolio. So you allocate, people give you money, and you put on so many company shares you put.
Yeah, sir.
Okay, and people will give you more money. Why? You'll show last year I made 10 rupees. This year I'm making 20 rupees.
Okay.
Next year I'm going to make 40 rupees. I'm investing in all these companies, see my growth, and they'll show all this, right? So what these guys do, they'll manipulate.
Okay.
To show. They'll move this around here, they'll do some jugglery, and they're showing good numbers, so people will think your index is doing very well. Keshav index is doing very well, so it'll give more money. Customer doesn't notice these things. Where do you notice? You see paper he'll give you with nice chart and graph, and you see it, and you don't really understand it. How he's putting money, how the fund is allocated, how he's spending the money you're giving, and how he's making this money for you. How much he's eating also you don't know. It all looks very nice. You give him 100 rupees and tomorrow he says, I'll give you 120 rupees, you feel very nice. So to prevent all this, the regulators, the guys who are running the show, right, they said you can only put 10%. If you're an active fund, if you're running the fund, you can only put 10% in any one stock.
Okay.
To prevent lopsided, so prevent any kind of mishmash happening, any jugglery happening, right, to keep it straight.
Okay.
So this is all well and good because HDFC was separate, HDFC Bank was separate.
Yeah,
so each one you can put 10%.
Yeah, sir.
Now when you combine them,
It's merging.
right?
Yes, sir.
Then what happens?
It is made into
All of a sudden your funds, all the money which you've allocated in two
groups
different
into
things,
one.
so now the weightage has to be worked out. So they have to wait and watch.
Okay, sir.
And these guys are already in trouble with all the portfolio management, which they got into trouble with SEBI. Okay, you heard about Axis Bank. Anand spoke about that. So all the mutual funds are already very cautious. They don't want to get into any trouble. So this is going to lead into a little bit of a rough patch for maybe a few months till it all settles down. During that time, there will be opportunities to make some money. Because if a fund manager is sitting too heavily weighted on one side, he has to release those shares.
Yes.
When you suddenly sell a lot of shares into the market, what will happen?
Share price will go down.
It will dip.
Then we can buy. We
Those
can
are
have
buying
more opportunities to buy.
So these opportunities might come, might not come, which is you have to, as an investor, you can watch.
Okay.
Wait and watch, and there might be opportunities that will come.
Okay. Sir, when we see about the merging, HDFC has also relieved from their educational loans. They just sell their education loans for 9,000 crores. And
They're exiting their education loan
yeah, sir.
business, and they're selling it off.
Yes, sir. Why are they doing that so, sir? Because when I research about HDFC, it's not about it not only has a bank, it also has a HDFC Life, AMC, and education loans and all. Now they are giving away the education loans. Oh, why are they doing so, sir?
Money.
Just for money.
See, you have to make profit, right?
Yeah, sir.
So you make judgment call. Judgment call is country's economy is contracting. Globally, we're going in recession. Things are a little bit tight. Interest rates globally are going up. So all these dynamics a banker has to look at. So something he has to cut costs, and by selling it, he'll make some profit. Right now, if he needs to infuse some cash, so he takes all these calculations into mind, and because of those financial pressures, he has to make a call. So they would have made a profit on selling it, pumped it, on some weak asset, or maybe they don't want to be in that business anymore because it's too expensive for them right now to keep it going. Collecting their loans and everything put together, it looked like it's a good thing to sell off right now at a profit. They sold it off.
Okay, sir. Sir, right now HDFC is merging. It's already biggest private banks in India.
One of the biggest. I think the biggest private bank.
Yeah, sir. It is the number one private bank in India. After the merging happens, will it become a monopoly like SBI, sir?
No.
Never happen.
It might happen. I don't know. But right now it's not. You cannot just say it's the biggest bank, yes.
Yeah, sir.
But there are other banks. It is diversified. Indian banking sector, private banking sector, there are quite a few banks. Not everybody. Do you have an account in HDFC?
No, sir.
Do you have an account in HDFC?
HDFC account card.
Yeah, there. It's not a monopoly. And if the merger happens tomorrow or whatever, are you going to have an account in HDFC? Is it taking over any of your banks?
No, sir.
So?
Okay. So, then
See, you have to look at it purely in terms of investing. Okay? All this is just noise.
Okay, sir.
All these articles you're reading is just noise. Mutual fund, you don't invest in mutual funds. So it doesn't matter about weightage. For you, all this doesn't matter. Like I said, all that matters is because of this merger, there might be a shift in pricing.
Okay.
Okay?
Yeah, sir.
And sometimes when two companies merge, let's say you have 10 shares in case of company A and you have 20 shares in case of company B. When these two merge, it might not be the merger lead to 1:1, meaning to combine together you will not get 30 shares. So you have to see the maths of it also. So you have to pay attention to all that as an investor. So sometimes if you're on the right side, you can make money off it.
Okay, sir.
But when you're looking at it as a long-term investor, it doesn't matter to you.
Then at last, what's your perspective on this merging thing, sir? What do you think about it? It is for a good cause or will...
I feel if you're a HDFC bank shareholder, it's good news for you.
Okay, sir.
And even if you're a HDFC, investor, it's still good for you. Yeah.
Okay, sir.
Housing loan is also good for you. I don't see any downside to it as an investor. That too as a long-term investor. If you're holding on to it for 10 years, you will make money off in the long run. You don't have to worry about it. HDFC is a solid bank.
Okay.
It's not going anywhere. Like you said, it's a large bank run professionally. There shouldn't be any problem.
Yeah, sir. That's why bring this topic to you, sir. Because when I read about this, I thought it will become the monopoly like SBI.
Even if it's a monopoly, like SBI. Okay, SBI is not monopoly. SBI is monopoly or whatever is because of the Indian government.
Yeah, sir. It's a
Indian government removes its hands off SBI, Tabak will fall.
Yeah, sir.
Okay.
Understood.
SBI is like a old diesel engine. It needs a lot of love and care from the engineers, who is our government, to keep it running along, chugging along. Okay.
Understood.
If the Indian government removed its hands off SBI and said it's owned like a private bank, publicly owned by everybody, it won't do very well. It's too bloated, too big, and has many problems, which Anand has spoken about. And for that to transform into a professionally lean machine, into a bank, will be so traumatic for all the people working in SBI, all SBI account holders, and most importantly, the government of India cannot play if it doesn't have access to play. It can only come to the playground through government banks. If it removed all government banks and made every bank private bank, and only RBI is there taking care of all this, and the government only works through that, then how will the government come into the playground and play with us? Anyway, that was diverging from the topic of HDFC, but HDFC share, yes. If you think it's the right price to buy, which I don't think it isn't,
Yes, sir. After the merging,
I think it's too expensive.
Oh,
You have to see price to book ratio for a bank.
Then
And
we have
I
to
think
decide whether.
SBI's price to book ratio is very high right now. There
Okay.
are lots of other private banks which are more attractive.
Okay, sir. Done, sir. Because right now I'm investing.
You know what price to book is, right? You're agreeing to it.
Yeah, sir. Price to book.
Not price to earnings.
Okay.
That's PE. That's
Book value.
PB.
You are saying the book value. For financial.
Correct. Now we're coming back to the red book.
Yeah, sir. For financial institutions, they have some
We look at
book values.
book value, price to book,
Yeah.
that ratio. That ratio should be where? For it to be attractive.
For P, it must
PB.
be around. For,
It should be below 1.
Ah.
Or 1.
Okay.
1 and below is very attractive.
okay. More than one. Is
One
not.
is, it's getting expensive. And if I see HDFC's one, to tell you, it's 3.17.
It's too expensive.
Yes, that is
Understood.
my thing. Let's see some other bank. Which bank does Anand recommend? Karnataka Bank, which Anand recommends, price to book is 0.7. 0.7. So
We can
there's
buy it.
room for that to grow compared to HDFC Bank.
Okay, sir. Understood, sir.
Understood?
Yes.
So that's all you have to look at.
Okay, sir.
And with this merger, probably the book ratio will go up or go down. You have to see also. So maybe after the merger, it might be attractive. I don't know. You have to see.
Okay, sir.
Anyway, thank you for joining us today on Paisa Bolta. I hope you found this conversation interesting and entertaining. If you did find it entertaining and educational, please do subscribe to our channel and turn on the bell notification so you'll be notified every time Anand or me and Keshav put out a video so you can watch it again. Thank you again for joining us on Paisa Bolta.
Thank you.
Welcome back to Be Rich. I am in Tokyo on work on the 5th of August 2023. I have a lot of following in Japan, Tokyo. Those who want to meet me in Tokyo on 5th August, kindly drop me an email on the address given below or contact us on WhatsApp there. My team would get in touch with you and facilitate the meeting. Once again, I thank you for your support for Be Rich.